Welcome to Financial Market Insights for Traders. I'm your host, Sophia, and today we are diving into a topic that continues to dominate global investing conversations, the China Economy Outlook 2026. Now, if you've been watching global markets closely, you'll know that China is no longer the same high-growth story it was 10 or 20 years ago. But that doesn't mean the opportunity is gone. In fact, what we're seeing now is a shift, a transition into something more complex, more strategic, and in many ways, more sustainable. So in this episode, I want to walk you through what's really happening inside China's economy in 2026, what's driving it, what's changing, where the opportunities are, and just as importantly, where the risks are. And we are not going to gloss over anything. We are going deep so you can walk away with a clear, practical understanding as an investor or trader. Let's start with the big picture. For decades, China's growth model was built on speed. Massive infrastructure projects, rapid industrialization, and export-driven manufacturing powered double-digit GDP growth. But that model came with trade-offs: rising debt, overcapacity in certain industries, and a heavy reliance on external demand. Fast forward to 2026, and the story looks very different. China is now focused on what it calls high-quality growth. That means less emphasis on raw expansion and more focus on efficiency, sustainability, and long-term resilience. Growth is slower on paper, yes, but it's also more stable and arguably healthier. And this is a critical point for anyone thinking about the China Economy Outlook 2026. Slower growth doesn't mean fewer opportunities. It just means the nature of those opportunities has changed. One of the biggest shifts we are seeing is the rise of domestic consumption. China's middle class has expanded significantly over the past decade. We are talking hundreds of millions of consumers with increasing disposable income. And these consumers are not just spending more, they are spending differently. They are prioritizing quality over quantity. They care about brands, experiences, health, and convenience. This is driving growth in areas like e-commerce, digital services, healthcare, premium goods, and travel. So instead of looking at China purely as the world's factory, investors now need to see it as one of the world's largest consumer markets. That shift alone changes how you think about investment opportunities. Companies that cater to domestic demand, especially those that understand local preferences and behaviors, are in a much stronger position than traditional export-heavy businesses. Now let's talk about technology, because this is where things get even more interesting. Technology is not just another sector in China. It's a national priority. In response to increasing geopolitical tensions and restrictions on access to foreign technology, China has doubled down on self-sufficiency. By 2026, the country has made major investments in artificial intelligence, semiconductors, cloud computing, robotics, and electric vehicles. This isn't just about innovation for growth. It's about control, independence, and long-term competitiveness. For investors, this creates a powerful but complex opportunity. On one hand, you have massive government support, funding, and policy alignment behind these industries. On the other hand, you also have regulatory risks. China's government has shown that it's willing to step in quickly and decisively when it sees risks forming in certain sectors. So if you're investing in Chinese tech, you need to balance optimism with caution. Now, we can't talk about China's economy without addressing real estate. For years, the property sector was one of the biggest drivers of growth, but it also became one of the biggest sources of risk. Over-leveraged developers, speculative buying, and inflated prices created instability. By 2026, the government has shifted its approach. The focus is no longer on expansion. It's on stabilization. Policies are designed to reduce systemic risk, support first-time buyers, and promote more sustainable housing markets. There's also a push toward rental housing and affordability. What does that mean for investors? It means real estate is no longer the high-growth engine it once was. You're not looking at explosive returns here. Instead, you're looking at a more controlled, slower-moving sector with selective opportunities. Next, let's move into one of the most exciting areas in the China Economy Outlook 2026, and that's green energy and sustainability. China is leading the world in renewable energy investment. By 2026, it has significantly expanded its solar and wind capacity, and it continues to dominate in electric vehicles and battery production. This aligns with its long-term carbon neutrality goals, but it also positions China as a global leader in the energy transition. For investors, this is a major theme. We are talking about opportunities in clean energy companies, battery technology, EV infrastructure, and energy storage solutions. These are not short-term plays. These are long-term structural trends. Now, let's shift gears and talk about demographics, because this is one of the more subtle but important factors shaping China's future. China's population is aging. The birth rate has declined, and the workforce is no longer growing at the same pace. At first glance, this sounds like a negative, and in some ways, it is. A smaller workforce can slow economic growth and increase pressure on social systems, but it also creates new opportunities. Think about healthcare, pharmaceuticals, elder care, and services tailored to older populations. These sectors are expected to expand significantly in the coming years. So again, it's not just about challenges. It's about understanding where those challenges create new demand. Now let's talk about financial markets and currency influence. China's financial system is becoming more open to global investors. There have been reforms to improve transparency and accessibility, and international participation is gradually increasing. At the same time, the Chinese yuan is gaining more relevance in global trade. It's not replacing major reserve currencies anytime soon, but its role is definitely expanding, especially in regional markets. For investors, this adds another layer of consideration. You're not just looking at domestic growth. You're also looking at China's growing influence in the global financial system. Of course, we also need to address the risks, because no discussion about the China Economy Outlook 2026 would be complete without them. First, geopolitical tensions. Trade disputes and political friction can impact everything from supply chains to investor sentiment. Second, regulatory uncertainty. China's policy environment can shift quickly, especially in sectors considered strategically important. Third, debt. While efforts have been made to control it, debt levels in certain areas, particularly local governments, still need to be monitored. And fourth, global conditions. China is deeply connected to the global economy. If global demand slows, China will feel it. So the key here is balance. Recognize the opportunities, but don't ignore the risks. Now, let's bring this back to you as an investor or trader. How should you think about positioning yourself? Focus on sectors aligned with long-term trends. Consumer-driven industries, technology aligned with national priorities, renewable energy, and healthcare are all areas worth paying attention to. At the same time, diversify. China should be part of your strategy, not the entire strategy. And just as importantly, use the right tools. If you're navigating complex global markets, having a reliable and intuitive platform can make a huge difference. If you're looking for a world-class, cutting-edge, user-friendly trading platform, you can get started here at crystalballmarkets.com/platform. It's designed to help you stay on top of market movements and make informed decisions with confidence. And if you're still learning or want to sharpen your understanding of macroeconomics, trading, and investing, I highly recommend continuing your education. You can explore beginner-friendly, practical insights through this podcast series at iss.com/podcast/crystalballmarkets. It's a great resource to build your knowledge step by step. So to wrap this up, the China Economy Outlook 2026 is not about explosive growth anymore. It's about transformation. China is shifting toward a more balanced, innovation-driven, and sustainable economic model. That creates new opportunities, but it also requires a new mindset from investors. If you understand the direction of change, not just the headline numbers, you'll be in a much stronger position to navigate what comes next. Thanks for listening to Asterisk Financial Market Insights for Traders Star. I'm Sophia, and I'll see you in the next episode.